Hello, my dear long-term investors and my dear viewers. This is your boy Bhuvi. Today I have handpicked some quality news that should be presented to you. So this is about the Rbi'S action over Nbfcs and the slump in prices of Nbfcs in the stock market. I think in Tuesday RBI took some the very harsh actions over IIFL Finance that it said you should not provide, give gold loans unless you are compliant with us. So the reason it said was it was not it had material supervisory concerns over IIFL Finance. At the same time, yesterday, RBI came with another punitive actions that damages the JM Financial Services, which is a financial company. RBI said you should not provide any loans against pledging the shares and bonds of your customers. We have found some irregular activities in that transactions you are doing and having with your customers. And the major outcome for the increase in bank index, declining in NBFC shares is as Paytm also concerned. Paytm Payments Bank was plummeted almost 50%, and this NBFCs are too getting plummeted by RBI's action. People and investors are concerning that let's take some money out and invest in banking stocks. So that's why yesterday Wednesday banking index hit at some high levels. I think it rallied some way. Fairfax India Holdings, which is a company who is invested in IIFL Finance, which has a 15.1% stake in IIFL Finance, said we will inject 200 million. We are believing in this management and our board of directors, and we are believing in this business to be to give a good run over long period. So we have 100% belief and we are injecting 200 million, said the spokesperson of the Fairfax. I'm not tracking this company and I don't know how the integrity of this management plays out in this period. IIFL is the second largest player in gold loan business. Its portfolio has 24,692 worth of gold loans. So at the same time when the NBFCs are sliding down, getting plummeted, and the banking stocks are getting to new levels, going 6% up, 8% up, and 5% up, or all the way like this. So you have to see one more report. I have to present this to you. This report was made by Institutional Investor Advisory Services, yes, which is in short form. It assesses 100 companies, top 100 companies in BSE, and check whether these companies are compliant with government and SEBI's laws. So it found there is some PSU banks in this list which is non-compliant. So it said that PSU banks have weak board structures and non-compliant with the laws and norms. Also, it said a regulatory enforcement over this PSU banks, PSU sector as a whole, is doing a very nasty job, which is not satisfying. The regulators are showing some partiality to take actions over the PSU sector. So the regulatory norms is that if the CEO or the chairman is the promoter, the 50% of the board should consist of independent directors. So in this bank, in this most of the PSU sector companies, it is not yet fulfilled. So I really don't know how the PSU sector index give a more than 100% return in some stocks, which is contradict to the reality. So as Lord Keynes says, market can be irrational longer than you remain solvent. So that's true in this case. That the people who are running the company are not good or not compliant, but how the investors are believing in that business because they are running in behalf of stakeholders. But I don't know. I don't believe in this type of things. and I will always stand for the integrity of the management, like Tata's, like Godrej, and very Dr. Reddy's and ITC, which is a, even though it's a professionally managed company, it has a integrity. Mr. Sanjeev Puri always maintain his integrity over the stakeholders. One more thing I have to say is, SBI. Let's compare SBI chairman salary and HDFC Bank's chairman salary. So HDFC Bank chairman salary will come around 30 lakhs or something. It will be always in the lakhs. But at the contrary, the HDFC Bank's chairman salary will be at 10 crores. Always it be at crores. A report released by Kantar Research says that FMCG growth in India will be around 4% or something, which is will be subdued till the September quarter of FYI 25, which is the second quarter of financial year 25. It says that even though the demand might be grow little bit, but you will see the brunt in the rural segment as well as in urban segment. It really says the K-shaped recovery is going on. Like the mass market is always the poor and middle class people. Those purchasing amount will be reflected. There's only those people's purchasing quantity will reflect in the numbers, because they are the mass market. So if they are not buying, how can we justify that these stocks will go up? Hindustan Unilever can have a 60 times the PE. I don't know. And Nestle has some high numbers of P ratio. That's unjustifiable. RBI might give 5% inflation, 6% inflation, or 4% inflation. So the reality is contradicting the numbers. You should not say the numbers is right, the reality is a lie. We should accept that, and our conscience know what is the reality. So we have to act upon our concerns and reality. And that's today's video, and I hope this video will be informative and enjoying to you. I hope you have learned something from my video, and don't forget to like, share, subscribe and comment in my video. Thank you guys. I